Today we're going with those Aurora numbers, and we're going to start with the numbers. So a year ago in Aurora, we had 125 new listings come to market. That's across all home types: condo, semis, towns, links, detached, everything. 112 sales through the month and 98 active listings, which carried over into August 21. In June 22, we had 172 new listings come to market, 69 sales through the month, and 185 active listings, which carried over into July. And then looking at July, we had a pullback in the amount of new listings coming to market, 130. Not shocking for the summer. 62 sales through the month, so that's actually fairly close on par, and 177 active listings. So we've seen that pullback as well. If we're looking at the money, July 21, we had an average sale price in Aurora at $1,230,000. 1,466 in June 22, currently trending at 1,371. So you have to remember with the average sale price, I mean, because I'm looking at these numbers and they're the reduction, we all know the market is in terms of average sale price is eroding right now. The media is really propping that up. But you have to remember it's an average sale price. So it's also calculated based on, in a place like Aurora where you got lots of multi-million-dollar, you got farms, you got condos, you got townhouses, you got semis. So depending on what is predominantly selling that month, it is going to pull that number around. I will say though that, I'm not necessarily seeing as big a disparity in Aurora in the year over year or month over month numbers as I am in other areas. Sales to new listings ratio, the SNLR, also known as the absorption rate, tells us out of the homes coming on the market each month, what's the percentage that are selling. So a year ago in Aurora, we had 89% of the homes that came on the market sold, 40% of the homes in June, currently trending at 47. So you might look at that 47 and go, that's great. The market's actually, maintaining, it's getting a little bit stronger, but you have to go back to the numbers and you have to look at how it's calculated. It's calculated by looking at sales divided into new listings. So we had sales actually stay strong, but we had less listings come on the market, which sure, of course, is propping up this number. But we have to look at what's going to go on maybe in August and September, and depending on if that trend continues, right? If we continue to see less listings again, or if once we get into August, September, typically we start to see more listings. So, certainly one to watch. And the SNLR is how we actually determine whether it's a buyer's market or whether it's a seller's market. Months of inventory remaining tells us that if no other homes came on the market after today at the current rate of consumption or current rate of buying, how long would it take to deplete the inventory? So a year ago, 0.9, 2.7 in June, and currently trending at 2.9 months of inventory. And again, 2.9 months of inventory, not actually the strongest they've seen. I mean, there are a lot of other markets surrounding. Newmarket and Aurora are actually fairly strong right now. I'd say at 2.9, even though that's a slower market, it's not necessarily a slow market. I mean, there's areas, Stouffville, East Gwillimbury, where we're sitting at 4 months of inventory, right? Sale price to list price ratio, homes selling 104% of ask a year ago, 98 in June, currently trending at 96. And to get a home sold, 14 days a year ago, and we had 17 in June, and we're currently trending at 21. So we're seeing that number bounce around a little bit. So, climb a little bit. Now, if you have any questions about the information here, please feel free to reach out to me. I would be happy to answer any questions you might have.